All right, Patrick, we've covered some amazing housing data. I think that was a great conversation. We've talked about the number of new homes and the housing starts and how that is not going in the right direction. We talked about inflation. We've definitely had some economic overview here, but the last topic I want to discuss is GDP, productivity, labor. What's happening in the economy and how are things going? What kind of data are we seeing out there, Patrick?
Well, we're getting softer and softer. At the end of the day, when we look at GDP per capita, it continues to digress and stay very, very soft. So, the productivity issue, I've talked about it for months, and then Bank of Canada finally came out, Deputy Minister, and I've just lost her name and off the top of my head right now. But ultimately, I talked about it in the last episode of Rein It In, which is to say, in case of emergency, break glass. It's become a very big quote, given it came from the Bank of Canada when it comes to productivity. And guess what? It's time to break the glass. And so this goes back to what we've talked about many, many times, JG. Manufacturing is down, imports. Canada's just not stepping up to give or share the world with the world, sell to the world what the world is missing in terms of commodities. They're putting blocks around the oil and gas industry, which makes no sense whatsoever. And so we see our productivity drop. We look at the employment that's happening and the absolute spike in public service jobs, public sector jobs. Now, if you've got a public sector job, got it. But at the end of the day, depending on where you are in that, it's not a productive job. It's administrative. So do we need that level? I guess this government thinks we do. The point of it is that when we look at productivity, we are just not there. And of course, that's what we need to drive that gross domestic product.
What do you think? What do you think they should do, though, Patrick? What do you think they should do in terms of productivity? Got it, but what's going to turn the ship around is my question. What are the indicators that investors should look for that something's going to change here?
Government, you're not going to change anything, because I go back to what I said. We're not investing in manufacturing facilities. We're talking about EVs, and we're going, okay, where's that going? Billions of dollars. So that's one small part of a bigger picture. Then we're not looking at the exports that we have in terms of commodities. We're not investing in research and development, which has been Canada's, I think, shortfall for years, is that we don't invest in research and development, which drives huge jobs. Now, on the other side of it, yes, technology is picking up, and there'll be somebody there going, yeah, but Patrick, technology is going to rock the world. Got it. But it's still not enough. It's not one thing. It's got to be a number of things. And when we look at the commodities that we have, from minerals to oil, I mean, just as an example, we're often importing more than we're exporting, and consistently. And even when we do export more than we import, rarely, it's fractional. It's meaningless. So then on top of that, we've said, JG, you and I've talked about this so many times, I've lost count, and it doesn't matter about the count. The point is that we have an economy that was debt driven based on what was happening in the housing sector. And that was our primary source of revenue in this country, primary source of jobs.
That was our manufacturing.
Yeah, that was it. And then we just shut it down, and we continue to shut it down. So what do you want to say about that? I mean, at the end of the day, until we get a different government with a different view of the world, and then that's going to take time to unfold. We were talking just briefly off camera about Bruelli out of El Salvador. Here's a guy who is like totally taken a country. So it is possible. He's taken the El Salvador as the worst rated country for production and for crime. And he's literally done a 180 with it. Now, there's still time. It still has to go through the process, but I'm observing it from the aspect of, yes, it is possible. And he's doing some remarkable stuff. And it's just an example that it is possible. That's the point. So it does take time, however, and that's what we're going to bump up against. Trudeau will be gone, Liberal NDP will be gone, and then let's say Conservatives move in. They're going to it's going to be painful. Fixing the problem is going to be probably more painful than what we're going through right now. So it'll be, anyways. We got a few years ahead of us of uncertainty.
We will have lots to talk about on Rein It In. Let me tell you, we'll have lots to talk about. This is an interesting chart, Patrick, I want to discuss, which is you can see here how the U.S. versus Canada is starting to gap. in terms of our per capita GDP, meaning the US is going up in per capita GDP and Canada is going down. Now, I find this a little bit fascinating, Patrick, and I wonder, and my question to you is this happening primarily because the US has really had, like, they've really shut down immigration? I mean, they don't have anybody going into that country right now. Well, not legally, anyways, lots illegally, but anyways. Whereas in Canada, we've opened the floodgates, and even though that's recently the tap has been turned off recently or slowed down, since this chart really, if you look at it, essentially since 2021, is that why our per capita GDP is down? Because our per capita has gone so far up and our GDP has not.
Well, exactly. That's a big part of it. And then let's not negate that what's happening between Canada and the US. It's not like they're buddies with us anymore. So there's also one of our trading partners that have throttled back as well. So there's a number of factors that go into it. But to your point, as Canada has now said, okay, we're not going to bring in as many non-permanent residents, we're going to start to see that number decrease. We may start to see a shift in numbers. In terms of GDP per capita. But here's the fundamental around it all, JG, is it takes time. These are things that we're looking at this today and everybody's going,
yeah, but it hasn't happened yet.
Well, it's like, it takes months, sometimes a couple of years before we start to see the effects of it.
Yeah, this is a very slow moving boat. And you make a little change at the rudder and you make a little change in direction. You don't see that change for a very long time. And that's the process we're going through right now. Here's another great chart on seeing the divergence between the US and Canada in terms of real GDP per capita. This is quarter over quarter. So definitely interesting to see where the world is going, Patrick, as we move through the rest of this economic condition. And listen, we're in Q2 of 2024 here. It's still the beginning of this year. And by this point, remember, if we back up the tape, by this point, like last year, but in summer of last year, we were saying, by Q2 of 2024, we will be 2 percentage points lower than we are in terms of interest rates. So, right, a lot of people were saying that. Things have changed quite a bit, is what I'm saying.
Yeah, I mean, where it was going and where it is right now is, or where people anticipated it going and where it is now is quite different. I think there's a fundamental here too, JG, when we talk about GDP and where Canada's heading. I have to say we would be remiss not to talk about the budget and the impact of this budget. And the impact of this budget and just the capital gains alone, just in the shift of capital gains, taking it to 66%, over 250. And I get all the numbers and all the math, but at the end of the day, what it's done is it's already shut down the market and pulling cash and capital out of this country. And that shift in the budget can, in fact, and I think will, in fact, have a huge negative impact on us economically. And that's already hitting headlines as money leaves the country.
We could see here that red line. I know it's not that big, it's kind of small, but that red line essentially shows, as the budget came out, the net inflow into the country is down like negative $40 billion when typically it should be going in the opposite direction. So, Patrick, yeah, not looking good already for sure.
Yeah, and it's only going to escalate from here. Now, at the time of this recording, the budget may not get approved, or it will, because the NDP will continue to support that initiative. But at the end of the day, when Canada is doing what Canada is doing, we are shutting down for business. This goes back to productivity. It goes back to our GDP growth. It doesn't look positive at all. Now, I want to just get, as people are listening to this, it's like this bad news rein it in segment. There isn't a ton of good news in it, but you have to look at the small part of the world that we are really focused on right now, which is saying, what does it mean to us as real estate investors? And when we look at what's happening, there's a whole different dynamic happening in Canada in terms of what we've got for supply, what we've got for population growth, that even if they shut down population back to, let's say, 300,000 or 400,000 a year, we still don't have the housing to accommodate it. So as investors, we still see a strong upside.
So, Patrick, I find this a fascinating time because it is in these moments when the headwinds look the strongest, when the news kind of looks the glibest, and it doesn't look great. This is the moment where the real investors have to see through this and have to be anchored to And I think we have to talk about, Patrick, like the real estate investment is a long-term game. You got to be investing for not 2023 or 2024 or 2025. You're investing for 2030, 2040, 2050. So you have to look that far out, and you can't let the current picture of today dissuade you too much, because then you're always going to be on the sideline, Patrick. That's the truth.
Well, there's another side to it, right? And you're going to wake up if you don't continue to do the grind, work through this whole issue, is that you're going to wake up in 10 years from now and go, oh my
I should
gosh,
have.
shoulda, coulda. And the dollar that I earned today is worth significantly less than it was 10 years ago. And you haven't put your capital to work. And, it does take some courage. It does take some work, because you've got to stay educated. It's why within REIN, we have the community and we surround ourselves with like-minded individuals who can actually see the future. But we have to plan for the future today and start taking action today in order to have a wealthy and I guess we'll call it some security and certainty in our financial future 10 years down the road.
I totally agree, Patrick. And I think this has been a fantastic episode of Rein It In, and where the market is today, and the kind of courage real estate investors have to have in order to see the future. Because to create financial security and certainty, you definitely need courage, especially in these economic times. But this has been a great episode, Patrick. Thanks so much for this.
If you like what you learned here, go to the description below and subscribe for our free Insiders newsletter, where you can also stay up to date for our upcoming events and our courses.